What's up everyone, it's Caddy with Money Investing. Welcome on board for another Market Open live stream here. Thank you so much for joining in. We are pretty much wrapping up the week. QQQ here down a little bit over 1% right now. So Nasdaq is down to 325 once again. We've got the SPY down a little bit over 89 basis points, and the Dow Jones also selling off quite a bit, 84 basis points. Oil got tagged at $90 a barrel and then started selling off, but I think a bigger story is going to be the significant drawdown on Bitcoin and selling right back down to now under 22,000, and Ethereum also now under 1,700. So both of those cryptocurrencies are starting to see a more aggressive sell-off once again. And then of course we are seeing some individual stocks also pull right back down at the moment. So thank you so much for joining. I really appreciate it. And make sure that you drop a like, and of course subscribe if you're new to the channel here. And so OLX has a small sell-off correction due to how strong the bull market we have. Such a weak sell-off of how strong the bull market is. So that's something that we had discussed in our Discord as well. So I talked about this on Wednesday, that we can all agree that the markets are getting a little bit heated. They're getting overbought. RSI, MACDs, we've talked about these conditions over and over again, and how the risk reward is really not in your favor at the moment. It's just not really favorable to be an aggressive buyer. So my personal strategy obviously has been to raise more cash, and become a little bit more prudent about where I'm spending money, and of course increase buying power for these opportunities. And I can tell you right now, there are going to be opportunities. There are going to be stocks that are going to come down that will represent potential opportunities, and when the time comes, I'm going to be ready to just dollar cost average more, or even sell cash secure puts, or even sell cover calls, whatever the case may be. But there are going to be opportunities, so we want to be definitely alert for that. So you're up too late and it's time to sleep, and the Market Open live stream with Caddy from Money Investing goes live. Massive liquidity in play. So about $2 trillion worth of options will be expiring today. They are set to expire today. Some might get rolled over, some might expire. So that could create some volatility. Absolutely. I think that's also on deck for today. And yes, this will reset the RSI, the MACD, to a more favorable level. Absolutely. I think, Kevin, that's a great point. I think that's really what we're waiting for, is, trying to mitigate risk and maximize reward, maximize returns. And when you have an overbought condition, then you just want to be a little bit more careful, more cautious. When you've got oversold conditions, that you want to be a little bit more aggressive and, be looking for those deals. That's really how I go about simple technical analysis. So looking at some of the upgrades and downgrades here. So Morgan Stanley reiterates Meta as overweight. However, they did lower their price target down to 225. Wells Fargo names Palo Alto as a top pick going into earnings for next week. Next week, I think we might have some interesting earnings with cybersecurity, and of course, Nvidia is also due for their earnings. And Atlantic Equities downgrades Nasdaq to neutral from overweight. And then we got Telsey reiterating Bed Bath & Beyond as underperform. And they said that they see shares dropping at $3. Wells Fargo downgrades Hewlett Packard or HP to underweight from equal weight, and Daiwa reiterates Disney as a buy. And then we got Bank of America reiterating Dix as a buy. Bank of America also reiterating Peloton as a buy as well. Morgan Stanley reiterates Robinhood as equal weight. Atlantic Equities reiterates Uber as overweight, and then KeyBank reiterates Apple as overweight as well. Increase their price target to 185 from 177. Then Citi reiterating General Motors as a top pick. Bank of America reiterating Home Depot and Lowe's as a buy as well. And then Citi reiterates SoFi as a buy. This right here is going to be the earnings calendar, so we're pretty much done. And John Deere and Foot Locker were the two companies that were scheduled to report earnings. We'll take a look at both of them here in just a minute. Oscar says, hello chat, sorry I'm late. So Oscar, just for you, I'm going back to this over here. Citi reiterates SoFi as a buy. So just a little bit of a, something positive for you and your holding here. So going over to, let's just first do the poll, right? Let me just start the poll off, and we'll see what the expectations are for today. By the way, this week, if the markets continue to slide here, on the day, we might end up closing the week red by about 1 to 2%. But markets today, let's take a look. Green, red, and then we'll just do flats here. So interested to obviously, see where the expectations are from everybody here. Okay. So Oleg says, yeah, September 7th is Apple's new products and services announcement. Yeah, definitely looking forward to that, iPhone 14. But I was reading some reports that because of supply chain issues that might get delayed. So, we'll find out soon enough within a month whether Apple is releasing their new iPhone. And I definitely am looking for an upgrade because I've been using, I think, iPhone 11 now. So I will definitely be looking for an upgrade to the 14. Yes, so that's I think that's gonna be a very exciting event. It always is come September for Apple, and then yeah, lots of chat about Apple here. Let's take a look here where it is, because this is the stock that's gonna be driving the markets. It has been driving the markets, right? I was actually looking at CNBC's chart master, quote unquote, sell it all. I'm sure many people watched that video. I think it was shared in our Discord as well. And one of the technical analysts pretty much just pointed out a megaphone chart. Which is, something like the lower highs being pointed out over here. Let me see if I can do that over here for this. So the megaphone chart basically that they pointed out was going to be the lower highs over here. That's going to be the lower highs, and then of course the lower lows that Apple is also making. Something like a widening descending wedge for Apple. Now, of course, they also mentioned the overbought conditions. Take a look at the RSI 74.75. So I think the main primary Carter, I think it was, and the main sort of idea behind this was that you definitely want to be hedged for the potential downside given the risk-reward trade-off and the overbought conditions that we're seeing. So I think that was the takeaway, is that you don't want to just keep blindly holding long-term, although you can, of course, if your long-term time horizons 10, 20, 30 years out, and of course the day-to-day fluctuations don't really bother you that much. But if you are a little bit more actively involved in, selling covered calls here or buying puts, or just being able to, trim some positions and reallocate, rebalance would be the smarter thing to do if you're more actively involved in of course, individual stocks. So let's see. Yeah, John says, I just don't see how consumers can keep gobbling up new iPhones given the global economic uncertainty we are facing. That's true. I think overall consumer demand is also expected to slow down a little bit, and as that's happened, advertising spends come down. But Apple's iPhones are kind of like a necessity now. I mean, it may not be like, so I haven't bought a new iPhone in the last 3 years, right? So I haven't bought any new models in the last 3 years pretty much. So I'm using my 11. But now I'm in a position that, okay, I'm going to upgrade my phone. Regardless of what the economic conditions are, I'm looking to upgrade my phone. And you will find similar people in that mindset. People who might have upgraded last year may not want to do it this year, but there's going to be people from a few years ago that might want to do it, because Apple's got like 1.2 billion install base, right? So you will just have people kind of rolling over. It's just going to be the same people buying and upgrading to the new iPhone, right? And that's pretty much what it's going to be, because even though in the recent quarter they told us that their switchers was very strong, like people moving from Android to their Apple ecosystem was very good. They saw very, very strong growth in switchers. But the main revenue driver is upgrades. That's what it is. That's where the real money is for Apple, is people who upgrade their phones every single year, or every other year, right? So all right, let's see here. So, all right, let's just go over some individual stocks here. Michael says, why don't you buy used? I could, but I don't. With Apple products, it's just not worth. I mean, with the exchange program, and of course with the upgrade, it just it might as well just pick up a new phone. Of course, with every other thing, I'm happy to buy used stuff. But when it comes to like specific things like phones and computers and stuff like that, I might as well just pick up new. But with other things, I am definitely picking up used. Like, for example, if I were buying a car, then yeah, definitely a used vehicle would be a better, more sensible choice. So yeah. All right, let's take a look at some individual stocks here. Let's see how they're doing. So Apple is down 85 basis points. We got Nvidia down 1.83%. So kind of giving up on some of the gains from yesterday. Tesla is down a little bit over 1.4% right now under $900. They've got a split coming up next week. I think August 25th is going to be next week. And then, of course, we've got Amazon also down 1.4%. So it looks like more FANG, Mint, more large cap tech pulling back a little bit, and the 10-year yields are up once again. They're up to 2.957%. So we're actually almost approaching up to 3% again. So September 1st, as that date gets closer and closer, we will see a potential movement, a lot of fluctuation in interest rates, and the flow of credit. I think those are two things that will really be the primary sort of indicators for us to watch as to see how the Fed's quantitative tightening is affecting overall market conditions. And if the 10-year yields continue to push higher, then of course that's going to put a lot of pressure on tech stocks, because again, their present value of all future cash flows will be worth less. As a result, their valuation will be worth less if the risk-free rate, which is the 10-year yield, continues to push higher and higher and gets back above 3%. So that is something we need to keep a close eye on. And talking about oil, another very, very strong touch point at around $91 per barrel. So we got rejected here once again at the lower highs and then starting to sell right back down, but it's been mostly consolidating for a long time. So, we've just been going sideways, up, down, up, down, up, down. We've just been like in that range within 87 to as much as $91, $92 per barrel. Yes, next, as yields rising, implications and inverse relationship with equities, as you've taught us. Yep. So as yields go higher, obviously it's going to put pressure on the valuations of the overall equity market, specifically for technology right now. So volatility here up 4.7%, so back over 20, but the VIX also has not really moved all that much. It has not budged at all. Instead, it's just been, trading sideways, consolidating so much within, 20 to as much as 21, 20, 21, 20, 21. It's just been kind of back and forth in that range for so many days. And right now, just pushing higher once again. We'll see what happens intraday, because we have seen the VIX kind of gap up, green pre-market, and then intraday sell off, and as the markets see a lot of intraday momentum. So that meme where VIX do something and you're just like poking into it. But the bigger drop for Ethereum, now under 1700, right? So both Bitcoin and Ethereum, just lots of selling pressure coming in for both of these. I think Bitcoin was just struggling. It was just like back and forth, big supply area here for BTC at 24,000, 24,500. We just like got rejected a couple times and eventually caved for us to break down even further. So more near-term support, I paid attention to 20,000. Obviously, that's also going to be a very psychological support again for Bitcoin, 20,000. And then for Ethereum also, we got rejected at a psychological resistance of $2,000. So this right here, very strong resistance area. We came down, we got sold off below this support level at 1,700. And now we're going to keep a close eye around here, roughly at around 1,550 for Ethereum as well. So, all right, let's see here. Let's take a look at the polls. Let's see where we are. So 71% expecting the markets to be red, and only 18% have any hope for the day to be green, and then 11% expecting the markets to be flat. So 70%, that's not surprising, because we are seeing a pretty intensified sell-off here in pre-market at least. But of course, nothing compared to what we have been through. I think 2022, I think this has been lots of incredible experiences of what volatility kind of looks and feels like. And we have gone through several days and several, weeks of consistent selling pressure. we've been through together. I think we've been through days when the markets have been down 2%, 3%, 4%, 5%, as much as 5%. So I think we all I can pretty much shrug off a 1% down day in the markets now. I think we're better equipped mentally to handle 1% for the markets. So are there still many shorts on the stock market? So Jay, that's a great question. I did a video on this in terms of record bets, and according to S3 Partners and PNB Paribas and all the other interactive sort of data analytics companies that kind of report these numbers do suggest that the puts, or shouldn't really say puts, but the bearish bets on the markets are still at record levels at over $100 billion. Now, they can simply be hedges. They can simply be, as you buy an insurance policy, for example, right? If you buy a put option, right, that's only an insurance policy against your actual position, right? It's only a hedge. And that could very well be the case for these bearish bets. But the fact that they're at record levels just goes to show that, you know, these hedge funds and these money managers, professional money managers, are still not super convinced that this rally is actually very meaningful, right? They might still believe that, okay, we've got a lot of problems, the economy is still under a lot of pressure, we're still getting recession fears, the Fed is still going forward with their interest rate hikes, inflation is only coming down, which is a good thing, but it hasn't materialized into an actual trend. It's only one data point that we got. So that does suggest that, okay, 107, 110 billion, whatever the case, whatever the number was, is a pretty substantial bearish bet on the S&P 500. Now, what's also interesting, and that's a good thing for the bulls, there's some silver lining, is that while these short bets have actually gone up to record levels, hedge funds, for the most part, have sat out this rally, right? And a lot of this has actually resulted in some hedge funds covering and some other institutional funds buying, right? So those have been the two reasons why we have seen very strong sort of momentum in the S&P, the Nasdaq, they've gone up. But a lot of the hedge funds have also kind of been sitting on the sidelines, and cash exposures have really been ballooned over the last, pretty much 6 to 12 months for a lot of these. So that is the silver lining. If that money starts flowing back into the equity markets, well, then you're pretty much looking at markets back at all-time highs and more. So, but of course, we're not there yet. But to answer your question, yes, there are still plenty of shorts sitting in the markets right now. So Matthew, what do I think about 40% dividend on Zim stock? I've actually done a video on this. So I've actually done a couple videos, more than 2 or 3 videos on Zim integrated shipping. So make sure that you do check that out. A lot of it depends on where shipping rates, freights, and logistics, like all those prices, go in the future. And that's been one of the reasons why Zim integrated shipping's revenue and earnings, if you take a look at those, and free cash flows have absolutely gone parabolic. It's gone exponentially higher. But once you start looking at those year-over-year comps, say in 2023 or 2024, that's when, things get a little bit tricky, because what if all these prices come back down to earth, right? So then obviously it's a good short-term play. All I'm going to say is that it's a good short-term play, but when you're looking at the company from a more longer-term perspective, just be careful that it is very much dependent on those freight rates and where they go, because their revenue is dependent on that. So that distinction is really important between short-term and long-term with Zim integrated. And with a 40% dividend yield, you will see something like a dividend capture strategy. So market, obviously, there's no free lunches in the market. So every time, obviously, the dividend actually is there. So you might see that, like on August 26th, like next week, when the ex-dividend date passes, you might see a big sell-off in the stock. I mean, similar to what happened over here. Look, on the May 27, the stock price the following day basically dropped 6.4%. It rallied a little bit more, and then look at the amount of selling for Zim integrated shipping, right? And same thing happened over here too. Look at the dividend, March 22nd, right? It got up to as much as 75, and then after the ex-dividend date, sold off 37%. This right here was a drop of 41%. So, market's obviously not stupid, right? 40% dividend is not going to be for free. There is going to be obviously some implications of that. So just be careful next week, because a lot of people do employ that dividend capture strategy where they just want to be part of it for the ex-dividend and then just get out. Who's the guy clapping in the poster in the back? Well, Michael, that is the great Sir Alex Ferguson. I'm pretty sure that is, right? Yep, so that's him. The greatest manager in the world, I would argue, but the greatest manager for sure in the UK for football, soccer. All right, so about 12 minutes left till markets open. Not a lot of changes here. Let's just go over some earnings. So we'll talk about Foot Locker. Wow, 24% up, Foot Locker. Wow, incredible. Surprised nobody's mentioned this before till now in the live chat. But $1.10 in earnings per share. Revenue was coming in just slightly ahead of expectations. We did break down the earnings last time around. Both times we talked about Foot Locker's earnings, and for the most part, it was just consolidating sideways in that range for a really long time. So just trading sideways. Very much. And now look at a very, very strong 24% rally here. So let's take a look. Let's see what they reported. So EPS came in $1.10, which was down about 50% from $2.09 same time last year. Analysts were expecting 80 cents. And sales were 2.07 billion, down from 2.28 billion. Analysts were expecting 2.08 billion. So revenue miss, but an earnings beat. And for 2022, the company said it expects EPS of 425 and 445 instead of the upper end of the 425 to 460. So, wow, we got a revenue miss, an EPS beat, but the guidance also was lowered a little bit. Analysts were expecting 442, so it was right in between that guidance, but also on the lower end. The company is now expecting sales to be down 6 to 7% instead of the previously expected, 4 to 6%. And then stocks have 24%. Incredible. Said on Friday that it signed a long-term connected inventory partnership with online retailers Fanatics Inc. that it said will expand its merchandise offerings. And under the deal, customers visiting footlocker.com, kidsfootlocker.com, and Champ Sports will, beginning this fall, have access to a selection of Fanatics licensed sports merchandise according to the statement. But yeah, I think earnings were okay. They missed on revenue, beat on EPS, forward guidance was lowered, and forward revenue guidance in terms of percentage decline was also increased to 6 to 7% decline. And yet the stock price up 24%, just incredible. So Brandon, yeah, my average on Meta is pretty high right now. It's probably in the 240s or 250s. I have to double check, but yeah, that is going to be that number. So I'm probably down like 30 or 40% on this. About 30%, give or take, 28 to 30% on Meta at the moment. So Tesla, let's take a look. So Tesla is down about 1.3%. Yeah, so cool. I'll answer a question in just a minute. So LEB is going down daily, then why not LEBD long for a quick swing trade? I'll answer that question in just a minute, but this right here, Tesla, 950 is going to be that resistance. So we're watching that resistance for Tesla, obviously. Then support level is going to stay put at 766. So that right there is going to be that level to watch. And right now we're just kind of hovering back and forth at the 200 SMA. So 200 SMA is going to be that level to watch at 905. And Tesla obviously has been consolidating sideways quite a bit. So splits coming up next week. August 25th is when the Tesla stock splits 3 for 1, and then we'll see how it trades after the split, because in the past we've seen run-ups prior to the split and then a sell-off after. But right now it's just more or less consolidating sideways prior to the split as well. So support level 766 is going to be the one to watch. Now with respect to LABU and LABD, when you're trading some of the more leveraged products, and this was one of our discussions in our Discord as well, and that was on volatility drag and volatility decay and things like that. It is really risky when it comes to trading leverage ETFs in general. And when you are looking at inverse ETFs, if you get caught up in LABD at the wrong time, then obviously it's gonna be almost a guaranteed loss. Very difficult to salvage anything out of inverse leveraged ETFs if you get caught up on the wrong side of the trade. So that, for those reasons, I definitely don't prefer switching sides all of a sudden. Right now I'm still long LABU with some shares, and I have covered calls on those. So yes, LABD can certainly push higher. It's definitely sold off quite a bit. I mean, it's come down from 85. It's down about 81% from those levels, and it can definitely push higher given the RSI of the MACD. But I'm comfortable just having the LABU. I've got a covered call hedge, so I think that would be fine. All right, let's see here. So Oleg says Tesla 300 after split, so even cheaper. Your 400 buy price. Are you loading with the discount? Yeah. So after the split, yeah. Obviously, I'll have to do a video on after the split what that fair value is going to be. But for Tesla, once it gets split, $300 is going to be that split adjusted price as of today, and then of course I'll have to calculate what my intrinsic value would be. It would be closer to, I believe, roughly at 175, closer to 150, 175 intrinsic value, based on a 50 times price to earnings multiple and a 25% growth rate. So those are going to be the two numbers I think that are part of my estimates, and of course everybody else's estimates were 50% growth rate and a 50 times P multiple, which is pretty much suggesting that the fair value is here right now. But then the other fair value that we calculated was over 1,500. So yes, 475, that would be based on today. I'm talking about after the split actually happens, after the 3-for-1 split happens. All right, so 5 minutes left for the markets to open. We are ready. We are ready to go for today and pretty much close out the week here. So if you're down on a stock, such as Meta in Kadi's case, wouldn't it be wise to sell it now when the market is high and buy it again a month later when the stock gets low? Alex, that's a great question, but how do you know that it's going to get lower? How do you know that the market's high or it can't be higher? How do you know that the stock's going to be at a lower price 1 month from now, right? So those are all questions that, yeah, theoretically that may sound like a great idea. Yeah, I would love to do that. I would love to take a small loss and buy it again in 1 month when the stock price is 20% cheaper. But can we actually do that in practice? Yeah, David says can't time the market. Perfect response. So, all right, one last take on the quiz here, or the poll, pretty much, not the quiz. We haven't done a pop quiz in a while, so maybe I'll throw in some questions here in just a minute. By the way, make sure that you drop a like here, 105 right now. At least we can get up to 200. I know we can. So 70% expecting the markets to be red, 20% green, 9% flat. So we'll go ahead and end the poll over here. No homework, it's Friday. Yeah, no homework, just a simple pop quiz when the time comes, if I think of something. So yeah, let's just go over QQQs. Support level 325 is going to be the one to watch. I know somebody was asking about the support and resistance on the Nasdaq. So, there's a lot of levels to watch. So I'm going to actually get rid of a few levels, make the chart a little bit more cleaner. But yeah, 325 is going to be that support to watch right now. So this is going to be that level. Intraday, we'll see if we actually do get validated here. And this has been a previous resistance for weeks, for days before we finally got that breakout. So 325 is going to be that level to watch intraday, and 328 is going to be that resistance for QQQs. And we are ready. We are ready. $2 trillion worth of options expiring today. Expiring or getting rolled over, depending on obviously market participants. Denny says, whoever gets the pop quiz right gets a free Tesla share. September usually is the most bullish month. Yes, bullish? Did you say bullish? Well, it is the most volatile, for sure. Seasonality-wise, I don't think it's the most bullish. I think Q4 is usually the time of the market when it's the most bullish. But September usually has a lot of volatility, that's for sure. But we'll talk about that, when the time comes. When September first week, we'll talk about the seasonality charts. But let's just switch over to our indices here. And we are ready. We are good to go. Apple pushing higher here. 173.40. Pushing higher, right? A couple minutes before market open. That's weird. This watch over here, New York time, is just 9:28, and this one's 30 seconds ahead. What? TradingView, come on. Maybe I just need to reload this page. This one's like 2 minutes behind. And this one's like right on point. Alex, do you have Apple Caddy, not your phone, but the stock? Yes, I do. I was thinking about trimming it a little bit. I mean, the fact that it's gone up so much, it's just crazy. $2.8 trillion. I think the real question really now becomes valuation, right? Valuation. What is the appropriate valuation? Because the company right now is trading at 28 times forward earnings. 28 times forward earnings for Apple. So you tell me if that's justified in this market, given that the earnings growth is now starting to slow down. If Apple were doing 20% earnings growth or 30% earnings growth, then absolutely. I think 28 times earnings, forward earnings would have been more than deserved for Apple. But Again, happy to get your views on it as well. But in my view, I think 20 times is a little bit rich, for Apple. Even for a company like Apple, I think 20 times forward earnings is a bit high. All right, off we go. Nasdaq here. First S&P 500 down 61 basis points at the moment, opening up just under 4260. And we've got the Nasdaq here down about 1%, just 12,800. And we got the Dow Jones down about 0.5%, 168 points. The yields continue to charge through. RSI above 60 is technically on overbought territory. I consider 70. I think 70 is the level that we kind of look for from a threshold standpoint, whether it's overbought, and then 30 on the lower end, whether it's oversold or not. Some people use 80 and 20, but the general consensus 70 and 30 is more appropriate. But the 10-year yield is getting up to almost 2.98, almost 3%. So very, very important over the next couple of weeks as QT starts, the real QT. And then we got Apple here just trying to recover some of those losses from pre-market, down about 33 basis points still. Nvidia is down a little bit over 1.9%. Tesla is down 1%, just hovering around 900. And then we got Amazon also down 1.3. So all FANG Mint stocks selling off quite a bit. Apple's pretty much more or less flat, getting some buyers to step in. Man, Apple's momentum is strong. Apple's momentum is just really strong. Just incredible. I mean, it's got green candles after green candles. It's not had 2 consecutive red days since the last week of July. So the entire, so far in the month of August, it's just been green candle after green candle. And no more than 3 consecutive red days since June 16th. We got a very similar rally over here. This was like 11 days, if anybody remembers. In March, 11 consistent days of just green. 1, 2, 3, all the way up from like 149 to 178. That was like a 20% increase in 11 days. No red candles. And then we're kind of seeing a very similar price action, but of course we've got a few red days here and there. But it's just incredible momentum. So Oleg says, I guess Apple will bankrupt more shorters than Tesla did in 2020. There was many bankruptcies. I think it's possible. I think a lot of people, a lot of hedge funds have already started to cover their positions. Starting with Michael Burry, he closed out his put on Apple after this 30% move, 35% move. And I wouldn't be surprised if more and more people start to do that, considering how strong that momentum is. But as we've talked about, it's not a question of if, it's a question of when we see that pullback, because it is inevitable. Stocks don't keep going up in a straight line, neither do they go down in a straight line. That's why we're seeing a little bit of a rally here. But eventually, in my view, I think there is going to be a time where we do see a pullback. That's what I've been preparing for in terms of raising cash, is to be able to dollar cost average and see them as buying opportunities and DCA further. Michael buried. That's a good one, Kent. I like that. So let's see. So Oscar, I don't have a fair value in coin. I don't think I do, but I'll definitely take a look at that company and see if I can do some analysis on that. So Jas Horgan, why are people saying Apple is overvalued yet buying Tesla? It all depends on the growth rate, right? So a lot of it also is dependent on the PEG ratio, which is the price to earnings divided by growth. So pretty much a growth adjusted earnings multiple. But I think the main thesis with that would be, or the main answer would be, that Tesla's growth rate obviously is much, much higher than Apple's. Tesla is what Apple was doing, let's say 10 years ago when it was first launching out, the iPhone back in 2007, 2008, and then the growth really accelerated, in 10, 11, 12, 13, around those years when it was doing like 30, 40, 50, 60% growth. So, of course, investors want to pay for growth, so that's why the companies do get a higher multiple, higher P multiple. So I think that might be the reasoning behind that. Is Apple a new meme stock? Short squeeze. I wouldn't necessarily call it a meme stock, but yeah, I mean, there's definitely, getting a lot of shorts out. Again, going over some 13F filings, got done with BlackRock today, got done with JP Morgan, Goldman Sachs. Again, that video will be coming out over the weekend. These are all reports from August 10th, August 11th, 15th. So very, very recent filings from 13F. And it's going to pretty much tell us some notable changes, some significant, buying in the second quarter for a lot of these fund managers. And when I'm going through these 13F filings, when I'm looking at their assets under management, that's a lot of digits, everyone. It's like, some funds have over 700 billion, 300 billion, 500 billion. A few companies that I analyzed that are pretty much investment banks, some of the largest, like BlackRock, for example, trillions of dollars in assets under management. So it's just crazy. Looking at what they were buying and selling in the second quarter is just insane. So I'll do that video over the weekend. Obviously, I won't be going over every single thing, but we'll go over some of the highlights from the second quarter and what they were buying and selling and some of the more notable new positions that they took in the second quarter. Pretty much big money took. All right, let's take a look at QQQs here, see how they're doing. They're down to 326, so getting a little bit of buyers stepping in, but more or less just consolidating sideways at 325. So just consolidating sideways, $325 is going to be that support level to watch for QQQs. Let's take a look at InMode. I feel like a lot of comments on InMode, down 4%, down to 32.50. So yeah, not a surprise, just coming right back down. The RSI, the MACD, you can see that. On the technicals, we're getting very, very overbought here. So I've trimmed the majority of my position. I'm pretty much just holding on to about 200 shares and then got a couple of covered calls. That's all I've got now on InMode. But yeah, majority of my position has already been trimmed with this stock. InMode is falling because Caddy said so long ago, so watch his videos. Well, I basically just put out a video saying that I'm trimming this stock. That's all I said because of, again, the technicals, right? We are here to mitigate risk and maximize reward. And if a stock gets up to your price target, there's absolutely no reason why we want to be greedy and why we want to eke out a few percentage points. Like, my target was $40. If it gets up to $38.70, the downside risk is so high for me to wait another $1.30 for it to get up to $40 that it's just not worth it, right? The risk reward is really not that favorable anymore. So it makes sense why you want to exit or trim or sell some and take some profits to lock in some of those gains. So Cat is a market mover. Yeah, no way. That's like $3, $4, $5 billion companies. There's no way. David, thank you so much for joining in. Really appreciate it, and hope you have a great day. So what price would I consider InMode again? $20. $20 was my intrinsic value 3 months ago. Nothing's really changed other than the price going up this much. So, it's gone up 79, 80%. So that was the fair value that we were watching out for, and that's the level that I'm really paying attention to. So if it comes down to $20, I'm a happy buyer again. But right now, it just looks like it's coming down. All right, let's just quickly run through the entire watch list. Let's just see what's going on. So red mic equals opportunity. I need to fix that. Red mic doesn't equal market bleeding. Red mic equals opportunities. And that's what I think this is all about. So advertising stocks, all of them down. Snapchat down 3%. We got Trade Desk, PubMatic, Meta, Roku, Pinterest, Amazon, Google, all of them selling off. ARK Invest ETFs are all down anywhere between 1.7 to as much as 4%. They're also selling off here. Banks are all red. So Deutsche Bank, SoFi, Square, Credit Suisse, Barclays, PayPal also selling off. We got Bank of America, JP Morgan, Goldman Sachs, all of them selling off as well. And then we got Chinese stocks here. XPeng, NEO also down 2% each, 3% Li Auto. Alibaba is slightly higher, 23 basis points, so pushing up. And then crypto obviously just getting crushed here. on the day. And then we got cybersecurity all down. So Okta, Zscaler, CrowdStrike, Palo Alto Network did get an upgrade today. So Palo Alto Network was part of a buy list as a top pick from Wells Fargo today, but they're still selling off here. Fortinet, Ping, Identity, all of them selling down. Dow 30, we've got, kind of like mixed for Dow 30. Merck is up, Johnson & Johnson, Amgen, Chevron, and ExxonMobil more or less flat because energy has just been very much back and forth. So we kind of like got like a mixed day for energy. Occidental, Shell, BP just like down slightly. Chevron, Exxon, Devon is up. So very, very flat day for energy. And for the Dow, really, I mean, there's not really a lot of movers in that index. And then, of course, FinTech also getting crushed. We got Upstart down 5.7%. So Upstart, I know that somebody was asking a question. Again, I'm completely out of Upstart as well. I have no positions with Upstart anymore. And then support level is going to stay put at $22, $23. So that is going to be that level to watch. So Kevin Jackson Hole, we'll focus on that next week in Wyoming. So that's going to be important. It's going to be mostly about, central banks policy. Might give us some more color into what the Fed is thinking about in terms of interest rates. So, we'll talk about that next week. I'll cover that over the weekend and what to expect going into when that meeting happens next week. So that definitely is something going to be interesting for the rest of August. And so PayPal, Square, all of them pulling right back down. And then let's see here, retailers, finally, some of the more staple names, Macy's, Best Buy, Amazon, TJX, Target. This was pretty much a week for retailers, and they've just been selling off. Walgreens had a pretty brutal sell-off. Yesterday or a couple days ago, it was down like 5%, back down to $38. Upstart, fair value, I've actually done a video on Upstart as well, so you can check that out if you haven't already, but I believe it was roughly at around $15. And I had cash secured puts on Upstart, which I ended up selling for a very small profit, 30 to 40% profit. Had I been assigned on those, my actual cost basis would have been around $15, which is what I also believe the intrinsic value is. And the reason is because of a huge guidance cut. I mean, literally just a huge guidance cut from Upstart's management. They dropped down on the revenue numbers. They dropped down on the actual net income. The bottom line is actually turned negative for the third quarter. So that was one of the reasons why I mentioned that I am closing out these puts in the Discord mention, specifically because of the big changes the management made in their guidance for the upcoming quarters. So that is going to be the intrinsic value for now, but we'll keep a close eye on, of course, future earnings and what the management reports. John says, sorry, Caddy, you are just too productive with the videos. It would also help if you could put the ticker symbols in the video titles for easier search. Yes, I'll try to do that. Thank you so much. I really appreciate it. That definitely does and should help with the SEO a little bit more. All right, so this is where we are. We got the Nasdaq now down over 1.3%. S&P is down 82 basis points, and the Dow is down about 0.5%. So QQQ should be at 325 now. So we're right at support. Which again does not come as a surprise. RSI, MACDs, we've talked about this over and over again. RSI for Apple, which has been the leader, it's now 7. Pop quiz. I almost said it. Pop quiz. How much is Apple of the S&P 500? Specific number to the decimal. Kevin says, we need better thumbnails. Pop quiz. How much is Apple of the S&P 500? Ooh, I got some 7.6s. 7%, 7%. Close, very, very close. People are on the 7s are very close. Oscar says 7.1. Ooh, it's actually 7.3 according to my last count. 7.3%. According to my last count, but again, the market cap's fluctuating every day, so all 7s, you guys win. 7, 7.1, 7.6, around that level, depending on obviously the market cap, right? So yes, it is around 7%. John, that is a very, very detailed answer. But as I was saying, since it is such a high weighting on the overall market, so since it is such a higher weighting, we've talked about the RSI, we've talked about the QQQs as well. And how some of these levels, 318, 325, are going to be some support levels. Right now we're starting to break down below 325. So the next level is going to be 318. Of course, the RSI is also coming down a little bit. The telescope, the telescope pattern. Michael, is there a question? So, hi, Caddy, you're after increasing your cash W. Is that Michael? Is that a question? Yeah. So let me know if you're asking about why I'm increasing my cash exposure or what I'm increasing my cash exposure with, because you just said, hi, Caddy, you're after increasing your cash exposure W. Yeah, so, large cap tech obviously has a much bigger influence than any other companies combined. So, oh, okay. So why am I increasing my cash exposure? What can you see coming up? So, we've been talking about the basic technicals, right? That's been my motivation to raise more cash, is because when I look at, logically speaking, when I look at the Nasdaq going up 22% in the last 6 to 8 weeks or so, that is a very unusual move, right? You don't see that very often, right? You only see that during bear markets. You only see that when there's a significant amount of shorts covering their positions. So when we see that happen, and the fact that the RSI, the MACD, the technicals start to become very overbought, you got so many percentage of stocks within the S&P, the Nasdaq, once again trading back above their moving averages. Whether it's a 50-day, 100-day, 200-day, they're trading back above their moving averages. That, is not a very favorable environment for me to be a buyer of stocks. It's not an environment where I want to be aggressively buying and keep pumping money into the markets. It's in fact the opposite. I like to look at the risk-reward trade-offs, and if I don't like what I see, then I just start trimming, and then, of course, increasing my cash exposure. My cash exposure usually fluctuates between about 8 to as much as 20%, right? Sometimes it'll go as low as 6% if I'm like really buying aggressively, but it'll somewhere be between 6 to 20, and very rarely does it get up to 25%. And right now I'm sitting at 15 to 16%, and I'm looking to get up to at least 18, even more so than what my previous goal was. At least get up to 18%, possibly even 20%, if the markets keep obviously pushing higher. So. And then, of course, as we have talked about this before, the markets will give you opportunities, right? They will. They always will. No stocks will keep going up in a single line. They will come down. They will give you opportunities, and that's going to be the time to take advantage of those deals and to be more aggressive when the time comes. As I pointed out in my yesterday's video, sometimes, the best trade that you can take is another pop quiz. Finish the sentence. Sometimes the best trade you take is do nothing. Yeah, exactly. No trade. Perfect. You guys got it. Yeah, so no trade at all. That really, over the long term, that really benefits. Because sometimes we do overtrade. We end up thinking that, okay, every day we need to make a decision, but that's not actually true. You don't have to make decisions some days, right? If you don't see an opportunity, just don't do anything. So, Ken says, do we get a gold star? Yes, gold star, A+, all the perfect grades. Let's take a look at Bed Bath & Beyond. So let's see how that squeeze is working. Ooh, wow, down 41%. So this obviously after Ryan Cohen, right? After him selling his position, I think that's been the story. Been reading it everywhere. But I think he ended up making like what is it, like 50 million or something, 50 to 100 million. So isn't he the same guy who is actually the chairman of GameStop and who founded Chewy? Or am I getting mixed up with a different Ryan Cohen? Isn't he the same person? Like, Kevin says he made nothing. Yeah, same guy. And isn't he like 37 or 38 years old? Why do I keep hearing that this is a 20-year-old kid who made 50 to 100 million dollars? Or was it something else? I even read somewhere that this like a 20-year-old student made like $100 million on Bed Bath & Beyond short squeeze. I was like, okay, like are there two different people, or is it the same person, just like different coverage? Okay, so the kid is somebody else. Yeah, that was a little bit confusing. I was like, okay, what is going on here? Like, are two people, or is it the same story just mixed up a little bit? Two different people. Okay. Quinn says two different people, two different guys. Okay, that makes a lot of sense. But yeah, right now down 42%, so selling right back down. The squeeze was obviously very crazy. I mean, 560% since July 27th. Just an insane rally. I mean, 5x in 5x in a very, very short period of time, and literally just a matter of 2 to 3 weeks, and then obviously selling right back down, coming down 42%. So resistance, we talked about, I think earlier in the week, we talked about 2850. That is going to be that next resistance level to watch. Ooh, so Nasdaq here intraday, just really seeing some pain here, down 1.5%. Yeah, Foot Locker's flying on earnings, very strong numbers. So Chirag says I bought 1,100 shares Bed Bath & Beyond in July at $5.10, sold it at $25. That's incredible. That is an incredible trade. Yes, so Tina, add PARA to our list of stocks to analyze and see if I can do a video on them. So I'll add this company, Paramount Global, to add to the list of stocks to analyze. So individual stocks, Apple now has turned red, down 67 basis points, and everything else is down anywhere between 1 to 3%. EMD also selling off, down almost 3%, down to 97.50. Then we've also got Mara, so Marathon Coin down 8 and 11%. Fubo also selling off, coming back down after the short squeeze. Upstart, Lemonade Fiber, Robinhood, Tattooed Chef. We got Square. Then we got, of course, Zim Integrated, Teladoc. So the only stocks that are green right now is, of course, Foot Locker, which is very, very green. And then we got UVXY, so volatility futures, since VIX is up over 5.6%. And then everything else is either flat or straight up down. So that's where we are. Yes, so Fortinet, the next support, we're actually starting to break down a little bit from 52.50. I would watch this downtrending pattern or this channel pretty much for Fortinet, and the next support is going to be this lower low at $44.50. $44.50, $45 is going to be that potentially next low for us to watch for Foot Locker. There might be like a horizontal support here, 48.75. We'll see if you actually do get that bounce. If you don't, then of course that lower low is going to be next, down to $42, $43. So this should be updated. I'm going to save this chart, so you should be able to see that on your end as well. Video on BYND, so Beyond Meat. I know that Beyond Meat is also one of the stocks that's heavily shorted, right? I think the short interest for this stock is also really, really high. Let's take a quick look. So highshortinterest.com, you can see it over here. This is, very, very simple database that I use. I don't have any access to dark pools or anything like that because I'm personally not really trading short squeeze or anything like that, but this is something that gives us a good sort of overview, bird's eye view of what stocks are short interest is really high. So Bed Bath & Beyond apparently still has 47%. Again, this data might be delayed, but we got Big Lots over here, MicroStrategy 37%, 36.5%, Upstart 35.5%. And then Beyond Meat's over here still comes in within top 10 and has 35% short interest. So I can do a fundamental analysis on this definitely, and do some more research and see if it's anything worth buying. But I already know that this is not going to meet all of our check marks when we look for qualitative and quantitative analysis. So we're only going to be able to value this company based on price to sales multiple because it's got negative earnings, negative free cash flow, I'm assuming. Let's come down to free cash flow. Yep, so negative free cash flow and negative EBITDA as well for the company. So EBITDA is, negative over here, 134 million minus. So yeah, we don't have those numbers, so we won't be able to put up an intrinsic value for the company just yet. And the only way we can measure it is by sales growth and price to sales multiple. Michael, what an interesting question. If you had $10 million line of credit and are about to declare bankruptcy, would you YOLO into the what would you YOLO into to pay a $30 million debt? Yeah, really not my type of strategy. I personally would, I don't know. Like I would, YOLO really is not like my way of investing. Like I'm very conservative with the way I do it, but I would just definitely be looking at Tesla. I mean, if it was just like a one-shot thing, this is like a make it or, make it or break it type deal, and I would just be looking at Tesla. And it depends when that 30 million is due, right? I can certainly sell a lot of puts with that 10 million and generate a lot of premiums. And if I can just pay, the interest on that 30 million, then 10 million, 2% of that will be $200,000 per month, is what you can do selling puts on Tesla, or doing the wheel strategy on Tesla, right? So 2%, if you get assigned, you sell covered calls. But if you don't get assigned, you sell puts again. Just keep doing the wheel strategy, and then you keep up with the interest or pay down the principal on the 30 million. So that's how I would personally go about it. But again, this is a really, really hypothetical, out of the box question, but not something that I really prefer in terms of strategy wise. All right, so Truly, let's take a look here, TCNF. So just been consolidating sideways, not really moving all that much. So it's just been on a consistent downtrend as well, right? So cannabis sector overall has been under a lot of pressure. Resistance stays put at 1675. And we are seeing a lot of bullish divergence here. So, RSI definitely showing some nice higher lows here. So, we're actually going higher than we did the previous time for the relative strength index, even though the price continues to make these lower lows. So there is bullish divergence playing through. And of course, we'll keep a close eye. Resistance 1670 is going to be the next one to watch. All right, everyone. So that is going to be it for today, at least for now. I will jump over to our Discord channel to answer any questions there. But we do have the Nasdaq selling off quite aggressively today, 1.6% down. We got the S&P down over 1%. And of course, the Dow is also down 74 basis points, with many individual stocks also pulling back. And as I've pointed out before, that the risk-reward trade-offs are not super favorable, so I'm personally not an aggressive buyer or a net buyer in this position. In fact, I am going to be a net seller and will continue to increase more cash and buying power for better opportunities down the line, which I do believe will come through once we do see a more prolonged, healthy pullback, right? Nothing to be afraid of or panicking, but just a healthy pullback, which is necessary for the continued uptrend that we have seen. So thank you so much for joining. Really appreciate it. Make sure that you drop a like. And I've got some new graphics that I added today. So this right here is going to be a new graphic. Hopefully you guys can see that now. So subscribe, join the Discord. Link's going to be down in the description below if you want to be a part of our money investing community. If you want, link's going to be down. As always, happy investing. Hope you all have a great weekend. And we'll be back at it on Monday morning. Jackson Hole meeting next week as well. Some earnings are going to be coming up as well. So as always, happy investing. I'll see you guys